Welcome to our first chapter in managerial accounting. Accounting information is usually divided into two types, financial and managerial. Your financial class, hopefully you've just recently finished that and you are moving now into managerial accounting. And the differences between the two, here's a chart. I'm sure you can find this in your book. Financial accounting is preparing statements for external users. Managerial accounting are reports for internal users. That's the biggest difference. Financial reporting, financial statements, those 4 statements that you learn to prepare your income statement, statement of retained earnings, balance sheet, and cash flow statement, they're all prepared using GAAP, so they are very structured. There are very specific procedures and presentation standards that have to be followed, so that all of those external users, regardless of the type of business or industry, they can pick up those financial statements, and they are all similar, and they should be able to compare or estimate whatever it is they're looking to do, because the financial statements are all prepared for the most part in the same way. Your external users are going to be your shareholders, creditors, any government agencies, if you have to follow specific guidelines depending again on the industry that you're using. Managerial accounting is information put together for the internal users, for management's use. It can be historical data, it can be projected data, and management uses this information for the most part to make decisions and to plan. Managerial reports do not have to follow any specific structure. GAAP does not apply to managerial accounting reports because the biggest reason management are looking for specific details, so they may have a report that might only look at inventory, and GAAP is not relevant to anything in those types of reports. Financial statements, again, financial accounting, those statements are prepared at very specific times, quarterly reports, annual reports. Managerial accounting reports can be prepared whenever you need them, every week or every day if you need. In a management accounting organization, there's a good chart. Here's a little, it's not the full flow chart, but a small piece of Callaway Gold Golf Company. And the president and CEO is right up there at the top, and then you have all of your different divisions that fall below that. In this type of organization, the departments or individuals that work in the company, they're either considered line or staff. Let's look here. A line department, anyone involved in a line department is directly involved in getting those goods or services to the customers. Callaway Golf, if you want to go back to that organization, there's a list there: the senior vice president, the plant manager, the managing director. If you think about a service-based business, for example, a hospital, the line departments are going to be the nurses, the doctors, pharmacists, if there's a pharmacy, those people that are providing services directly to the customers. In a staff department, that is kind of everyone else that assists those line staff. Again, in our service business, in our hospital example, that's going to be the administrative department that provides support, or the records department to get those records to the doctors and the nurses. In the companies we're going to be dealing with in managerial accounting, most often the chief management accountant is going to be your controller, and the controller will have staff below them. Depending on the size of the organization, they may have different accounting departments. They may have a separate accounts receivable, accounts payable, budgeting, tax department. And it is the controller's responsibility to manage all of those departments and take the information from each of those departments and build the company's financial statements, as well as any management reports to help the other department managers in their day-to-day activities. The management process has these 5 basic phases, and these 5 things you're going to need to know. These are easy questions for exams. The 3 you'll hear most often are planning, directing, and controlling. Improving and decision making are the other 2 that pop in. And here's a flow chart that explains all of these things and how they interact, if you want to go back to that or look at that as we are discussing it. The first thing management does, obviously, is planning. And regardless of any business, the first thing you want to do is plan, and that is setting your goals and objectives. What is it you're trying to do? And figuring out the course of action you're going to take to achieve those goals. There are 2 different types of planning. Strategic planning is basically more long-term. Operational planning is the day-to-day operations of the business. Once you have created your plan, you are going to direct it. Make sure you're watching it from day to day and try to implement that course of action that you planned on. Controlling is looking at the actual results and comparing it to that original plan, what you thought was going to happen. In doing that, you're going to get feedback, either good or bad. That is probably one of the most important parts, is this controlling aspect of management, making sure what you expected is truly what's happening, because this is where you're going to find where your problems are. And once you find those problems, hopefully you find them quick enough to make some changes and get things back on the path you were hoping for, and which is our improving. Management's always looking for ways to improve everything within their business, streamlining things, cutting costs, improving their products that they are selling to their customers. So it's you're constantly looking over these things. And then finally, all of this information is going to result in decision making, and that can take many forms. Should we get rid of a product line? Should we bring in something new, a new product line? Should we get rid of our direct labor, and automate. Again, this decision-making process and these 5 management functions, they are constantly going on in some form or another on a regular basis. All right, and let's take a minute and see if we can put this together. There are 3 phases of the management process: planning, controlling, improving. That's 3 of the 5. So see if you can match the following descriptions to the proper phrase. Let's start with the description. A, monitoring the operating results of our plans and comparing actual with expected results. B is rejecting rejects solving individual problems with temporary solutions that fail to address the root cause of the problem. And then C, used by management to develop the company's objectives. I'm sure you guys can figure this out. I'm not sure how the answer pops up here. Oh, pops them all up at once. So planning is C. Planning is the first step. You're developing the company's objectives. Controlling comes next, or directing actually, but controlling is monitoring those and comparing actual with expected results and taking that feedback and finally improving. And by improving things, again, we don't want temporary solutions. We want to find the root of the problem if we run into problems and address that and find long-term solutions, not just that temporary band-aid. All right, that is our first part, and that's long enough for now. I will be back with part 2 of Chapter 16.